Hi everyone, so in this video we're going to be talking about fundamental analysis, what it is, how it's done, accuracy, and its main components. Here's the definition, which says fundamental analysis is a method of interpreting a company's financial statements / balance sheet, financial health, competitors, and market control in order to determine the long-term outlook of the company. Now this definition is heavily based on fundamental analysis for investing purposes, which is why it specifically states companies. However, fundamental analysis is not limited to only companies and their respective stock. It can be used on derivatives, bonds, and economical data, all of which are not directly related to any individual companies. So derivatives can range from the S&P 500 index to currency indexes like gold or Bitcoin. Bonds are loans you can give out to the government when they agree to pay you back with interest. And economical data can be interpreted using fundamental analysis to look for the long-term health of the economy. But for the simplicity of this video, we're going to focus more on stocks and their individual companies. Now, fundamental analysis is used for long-term investments. This is any investment you plan on holding for more than a year. Fundamental analysis will do nothing if you try to trade the fluctuations of the market. So if that's what you're looking for, technical analysis will be a much better option. Anyways, I would like to mention that fundamental analysis considers many factors to determine the final result. Some of these factors extend beyond its own definition. You should also consider the company's leaders, such as their CEO, understanding the industry, and understanding the company's future plans. For example, if we take a look at Tesla, the financial statements of Tesla makes it look like a horrible investment because of how overvalued it is. But when you consider the fact that Elon Musk is Tesla's CEO, it's no longer that bad of an investment because of Elon's exceptional leadership, great ideas, and his determination to build a better company. In terms of understanding the industry, we know Tesla is definitely a big clean energy tech company. The future outlook for this industry is enormous, so that adds some justification to Tesla's ridiculous valuation. Whereas something like the fossil fuel industry will most certainly lose value over the years as the fight against climate change escalates. And finally, understanding a company's future plans. We see Tesla fiercely trying to lower production costs, battery costs, increase their factories, and push out new vehicle models like the pickup truck and the sports car you see in the picture. These plans again add value for Tesla because it's a clear sign that the company is pushing to grow. And the reason I'm using Tesla for all these points is because Tesla is a perfect example of how valuation cannot be determined based on balance sheets alone. So financial statements. Financial statements are written records that convey business activities and financial performance. Main parts of a financial statement include sales, assets, and liabilities. So here on the left, we have the sales section of Apple's 2020 fourth quarter financial report. On the left column, it tells you exactly what each row is about. So right here. On the top right, it tells you the time period each number is recorded. And finally, in the middle, we have all the numbers and information for this financial statement. So how do we interpret this information? Well, here we have the two other main sections of Apple's fourth quarter report. And the reason I'm using Apple is because we already know it's a successful company. So its financial statement should tell us what to look for in a successful company. Anyways, on the top left, we have the asset section. And on the bottom right, we have the liability section. We want to look for growth or insignificant change in asset value. Right here you can see both numbers, 320, 330,000. And a sustainable amount of cash and cash equivalents. We also want to see consistent growth in sales and net income, which you can see from the previous slide, since that was the sales section. And in the liability section, we want to see small increase or insignificant changes in current liabilities. So you can see here, both numbers are 105,000. You do not want to see a huge spike in debt. So Apple did a good job here of keeping its current liabilities at 105 through 106 billion over the past year. And finally, you want to see mostly non-current liabilities, which means the debt does not have to be paid off within the year. So you have more non-current liabilities than current liabilities. Next, we will look at financial health, which ties in closely with what we see on a financial statement. So financial health looks at the long-term sustainability of a company. It shows whether or not a company's sales can be sustained and continue to grow over the next couple of years. For our example for financial health, we're going to be using Amazon, which we all know is financially healthy based on its massive valuation of $1.6 trillion. Its moat, which is something that sets the company apart from competitors, which in Amazon's case is its fast delivery times and Amazon Prime subscription. And the fact that Amazon customers are only increasing each year, which means its sales are only going to increase. On the balance sheet, we see good indicators of financial health with the 5-year trend here of consistently increasing assets. And the best indicator for Amazon is the liabilities to asset ratio. So it shows the percentage consistently dropping, which shows that the amount of assets is increasing faster than the liabilities by proportion. And also, the increasing liabilities that you see here is normal because the assets and the liabilities move together. So competitors and market control evaluates how a company can stand out and outgrow its competitors. So for this, we're going to go back to Apple, for example, since we already know Apple is a huge competitor in the tech industry and dominates the mobile device market. Some competitors for Apple include Samsung, Microsoft, Google, and the big laptop manufacturing brands. What sets Apple apart from all these companies is its $2 trillion valuation, so it's the most valuable company in the world. It's a wide variety of products across many industries, its loyal customers, the unique iOS software, and its huge market control. So Apple destroys Samsung and Google in manufacturing mobile devices. It rivals Windows from Microsoft with Mac OS in the software industry, and it rivals the big laptop manufacturers with their MacBook. So what we want to look for when evaluating competitors is a unique feature to the company, their potential or present performance of the company in terms of revenue and market control, as well as the loyalty of customers to the brand. So lastly, let's talk about the accuracy of fundamental analysis. So if fundamental analysis is thoroughly conducted into all aspects of a company, then it is almost a guarantee for profit in the long term. This means that you might lose some money on your investment after buying it for a week or a month, but the long-term direction of the price is moving up and the profits will show up. Obviously, fundamental analysis cannot assess insider information or future reports, so it will not be accurate under the circumstances of sudden bankruptcy, multiple disappointing quarterly reports, and consistent news reports that might bring investors to question their original fundamental analysis. Also, market conditions and economic health is not factored in fundamental analysis. Poor economic conditions will result in more sellers than buyers, changing the long-term direction of the market to going down. So that's it for this video on fundamental analysis, and I hope you learned something new today.